All right, Matt Gouget, Get Better Everyday Podcast. I'm excited. Amy Parker's with me today. We're going to talk all things appraisals. We're going to talk a little bit about real estate. I'm excited. 2024 and beyond, there's going to be some changes coming to the appraisal world. So we'll dig into some more of that in a bit. Amy, why don't you tell people a little bit about who you are and why you're here?
Yeah, absolutely. My name's Amy Parker. I'm the owner of Appraise It Today. I'm current president of the Real Estate Appraisers Association here in Sacramento, California, and I specialize in valuing homes in the greater Sacramento region. I do valuations for cash buyers. I do valuations for banks, estates, divorces. Hey, you want to buy out your business partner? I can do an appraisal for you.
Awesome. Yeah. What I like about having you on and talking to you specifically is that you're active, right? You're taking bank appraisals, you're taking AMC appraisals. And so it's not, there's a lot of people on the internet today, loan officers, real estate agents even, that are talking about things going on while not actually practicing it. So thanks again for coming. I enjoy having you here. First thing I want to talk about, because you mentioned it to me, and I know that like with automation disrupting a ton of businesses, there's automation coming to appraisals, and there's different types of processes that companies are implementing appraisals in 2024. What's the deal with the ROV, with that process changing?
Yeah, there's a thing called an ROV, which for viewers means reconsideration of value. And you think about it, you get a home appraisal, you're purchasing a home, and all of a sudden you're shocked when the appraised value doesn't equal what you're going into contract for. And believe it or not, there wasn't always a process to dispute the appraisal. So in August of 2024, the powers that be, Fannie Mae, Freddie Mac, VA, FHA, have all decided there should be a formal process. If you're disgruntled or you think that you got a bad appraisal, there should at least be a form you fill out. Every lender will be required to have some formal process. And what's interesting on my side is that if somebody doesn't agree with my opinion of value, it would be nice just to get a form from them with their pleading their case and providing me with information, and then I could just reply to it.
Right.
And it might be sometimes, I'm sorry, the value is not equal to what you're paying for. Or it could be, oh, I missed that, and I might be able to change my value. I do a lot of review appraisals for people who feel like their value of a report came in low. And this will give us all a new process and make it easier and better for consumers and better for mortgage folks.
Right. Yeah. Because I think that's the problem is that, mortgage originators, real estate agents, they might not know how it works. And so now having a uniform process where it's like, here's exactly what happens. If you don't agree with the value, here's what we need from you, whether that's comps, whether that's, you filling out explanation of what the appraiser might have overlooked. Like you said, there may be an error. A lot of times they think it's higher value because they think it's so.
I know. I mean, people will pay extra for certain things. I mean, certain features add value, but also there's minutia. You might pay extra to live around the corner from mom or dad. Or they may pay extra to live around the corner from their grandkids. So there's all of those facets. And sometimes people do pay more than what the true market value of a home is.
Yeah, for sure. I like talking, this minutia type stuff about the real estate world. It's kind of like behind the curtain. People don't see this stuff every day. And if you're a real estate agent, you've probably heard the term reconsideration of value. If you're a loan officer, you may have heard of it. As a consumer, you wouldn't know unless you had an appraisal come in short and then had someone explain to you, we're going to do a reconsideration of value. The list side's going to gather some comps and some information to try to not necessarily persuade the appraiser, but in most cases, like you said, it's, hey, you might have missed this one or this one closed the day before you did report, whatever the case may be. I've got a specific question for you because I like digging into this stuff. Reconsideration of value. What % of the time, in your professional opinion, does the value actually get changed?
Typically the information provided is not substantive enough to change the value. I actually one time had somebody submit one of these on an appraisal I did, and it was the buyer, and they were so upset. And basically, this floor plan in the area was selling for like $550, and they went into contract at $575 because they wanted the house, but their hope was it was going to appraise for $550. Like that was their whole game plan.
Oh,
was it?
Then
was,
we're going to renegotiate with the seller.
And they were going to renegotiate. So they won the bidding war, but they had no intention of ever really paying $575. Wow. So get this. The day I'm there, there's a home 2 doors down, model match, and it closes at $575.
Wow.
I mean, you can't dispute that. So I came in at $575, and they were mad because they never had intended to pay $575.
That's amazing. I actually had one appraisal where that happened as well, where the buyer told me he wanted it to come in lower. He wanted it to come in lower because he wanted to use it for negotiating power. So yeah, that's the opposite. And usually it's, hey, we're in contract at $590. The appraisal came in at $575. It's going to mess up things.
But sometimes, I mean, I have seen and reviewed reports where, like, for example, there was a second detached garage that the appraiser forgot to put in the report. And so that second garage added value, and they just forgot it. So they corrected the report, and the report value did go up.
Right.
So it can happen. It just depends on the facts. But the way we are hired by a bank is the day we are there. The sales that occurred as of that date are what we have to use. So if something occurs 2 weeks later, we can't use it. We have to use it as of the date we were at the inspection.
Right. Yeah. And you mentioned, appraiser might miss something because in this case, the appraiser is human. And with a lot of changes that I've seen coming and talks about, alternative ways to appraise homes, a lot of it involves technology. I'd love to hear from you as an active appraiser. What are some things that technology, just no matter how good the software is never going to be able to take into consideration, never be able to, take the place of human?
Yeah, currently there is a term called an automated value model. Those are products like Zillow, and I'm not a fan. There's no A for accurate in Zillow at all. And like, for example, let's just pick on Zillow. Let's just go there.
Yeah, okay. I got another follow-up for Zillow, so we'll pick on them.
So let's just this. You could have a home that backs up to a busy freeway, and it would say that location doesn't matter. And it would value your home potentially the same as the most recent sale that backed to a parkway. Or it might look at the photographs of one home and see with its AI technology that the photos look like a remodeled home. But what they don't know is the pictures showed a remodeled home, but the home needed a roof, or the home had $16,000 in dry rot. It just doesn't know. So automated value models don't always get it right. I think they're perfect if every home in the neighborhood is exactly the same and equal condition and no locational factors. They might be right. But that's kind of one of the things we're seeing. And we've been seeing that for a while.
Right, for sure. While we're on the Zillow train, we've got a friend that recently listed his home for sale. And he's like, Matt, how accurate is Zillow? Because he noticed that Zillow estimate before listing was one price, and then the home gets listed, and voila, like Zillow changes their estimate by $300,000.
Yeah, all of a sudden it's worth whatever they pick.
What is that? I think one time somebody explained it to me, and I've since forgotten. But what is it about? I'm guessing it's that data point, the listing price,
and whatever their data is.
Yeah, so it was worth like $787 before, and then it got listed, and all of a sudden it's worth $950.
It really is bad with location. It is also bad with, you can walk into a property that's on a half acre and walk into another property that's on a half an acre, and the home is configured differently, the topography is different, and they feel different, and it doesn't get any of that. It's just black and white, bedroom, bathroom, garage, pool. It just assumes none of that other factors are taken into consideration.
Yeah, I think I know that, and you know that better than most people. And for the average person, walk through a couple open houses and tell me that like one 1,800 square foot layout is the same as another.
no.
Like there is homes that just, they aren't set up. And usually it's the older homes where it's like, what were they thinking when they built this thing in 1955? Like no family could ever, like it's not functional. And so of course there's going to be a value difference between functional square footage and non-functional, which, I don't even know if that's a term, but I just made it up.
I think they call it functional obsolescence, but that's too techy.
Yeah. I'm a public school kid, so those big words aren't for me. While we're on the topic of value, I know as a mortgage broker, I'm talking to a lot of people that are, stuck for lack of a better word, where they're not going to go buy something new and slap a 7% interest rate on the next home. So instead, they might do a home equity line of credit. They might do some repairs to current home. The question I generally get from people is, what are the things that I can do that are going to be the most bang for the buck? Because I think most people probably know this. Like just because you spent $90,000 on a pool doesn't mean that it's going to add $90,000 in value to your home. So as the appraiser, tell me what stuff is going to, just maybe help your standard of living.
The theme is cost never equals value.
Right.
So you put in a $4,000 garage door. It is not going to equal $4,000 in value. You put a $150K pool, it's not going to equal $150K. The math generally does not come out. So that's the first thing. So of course, do the renovation to what meets your needs and, don't focus on, hey, what's it going to sell for in the future?
Right.
I mean, that's very important. But I mean, these days, biggest bang for your buck is updating the kitchen, the floors, the bathrooms. I mean, that's the biggest bang for your buck. And as an appraiser, get this. One of the first things I'm asked to comment on regarding the home is the condition of the kitchen and the bathrooms.
Yeah.
And I actually have to say, has anything been updated or remodeled in the last 5 years, 10 years, 15 years? And believe it or not, something that was remodeled over 16 years ago, there's not even an option for that because they consider potentially a remodel 16 years ago is outdated. But I mean, I see homes that are, from the 80s and 50s and 60s, and they have not been remodeled. And if you've got shag carpet, that's outdated.
Yeah, for sure. I don't think shag carpet is in style. Maybe it'll come back. You never know.
I know. And the other thing that adds value in our region, and I know a lot of people who are outside the greater Sacramento area don't always understand this, is we are an area that it is very warm in the summer. What is it? Over 90 right now? Mm-hmm. Outside, not in the studio, outside. Pools add value here. Now, in certain parts of the country and in California, having a pool does not add any value. But in our region, having a backyard with a pool, outdoor dining area, barbecue island, all of that are features that buyers are looking for today.
Yeah, for sure. And that's the thing too, that people, to me, it makes all the sense in the world. What are buyers willing to pay for? If they're willing to pay for a pool, that's going to increase your value. We bought a house in 2017 with a pool. I could never, ever live in a house without a pool. Since, I didn't have one for the first 37 years of my life. Mm-hmm. For the last 7, I have.
And it does matter kind of about the configuration of your house on the lot. I mean, a pool that is in the yard and not 2 steps out of your sliding glass door is a good thing.
Right.
If you have a small yard and you filled it with a pool, you want to try and get that pool as far away from the back door of the house. But we have people who will fill a small yard with just all pool just to enjoy that experience.
Right. Yeah. I've seen that before too, where it's like you jump out the back door and you're in the pool.
Yeah, it's not good for a party.
Right. For sure. Yeah, it's probably not good for little kids and whatnot, but sometimes that's all the space you got. I want to ask you, because I love good stories. Mm-hmm. Being in mortgage for a decade, I've got some great stories. In real estate, there's always great stories. You shared with me offline about an appraisal you did recently that was extra difficult. Mm-hmm. And it took a long time. So the viewers probably wonder, like, why did it take a week back to get my appraisal? Share your story so that people can get some context of like what's going on behind the scenes.
No, absolutely. We are not as fast as Redfin and all the online.
Yeah, I just go Zillow.com and I get that estimate right away.
So Appraisers are licensed by the state of California, and we're required to follow the uniform standards of appraising. And those standards say, we can use sales in the area to define a home's value. We can use the income it generates, or even, in the case of a fire, you're looking at the cost to rebuild. So those are the 3 ways to value. But we get orders from lenders, and then we have an overlay, and that is what requirements Fannie, Freddie, FHA want us to complete to do the valuation, and the individual lender. So a typical appraisal report for a bank is going to be at least 25 pages long. Yeah. So, that's the first big hurdle. The second big hurdle is we go into a project not assuming all the facts are correct. We have to actually go out and visit the home. We have to measure the home. And the reason we measure the home is because the square footage in public records is not always correct. It can be smaller or it can be larger. And then after we've collected information about the home, I know you're already tired and I haven't even gotten halfway there. You then have to pull sales and pending sales. And then the banks and these other entities require us to put in the report our own photos of those sales. So we have to drive around and look at sales. We don't get to look on Google or any other online. We look firsthand at a property because honestly, sometimes photos lie.
Yeah.
I have been in homes where online it looks like they have brand new white marble counters. And when I show up, it's a white tile counter and the photographer blurred out the grout lines.
Wow.
So that is the start of the process. Sometimes we have to converse with participants in the market, sellers, buyers, real estate agents, to find out what was happening in a particular house. So I recently had a home I was appraising. It was in contract over $2 million, and nothing had sold over $2 million in the neighborhood. And I told the bank when I accepted the order that this was kind of an albatross, an outlier where nothing had sold in the neighborhood for this high, and it was going to take longer because not only was I going to have to do what I just discussed, but I was going to have to go look at other neighborhoods and drive around even a farther range of homes. So I completed the report. I think it was 45 pages. I submitted it to the bank. And there were homes in the neighborhood that were in the report, and then there were homes from the competing neighborhoods. So I had to compare average sales price of different neighborhoods and make all of these adjustments to come up with a value. Now, the value was within $100,000 of what the people were in contract with. But what was amazing is when the bank got my report, all of these alarms went off because an appraisal is a risk assessment tool for a bank.
Right.
It's not for the buyer. It's not for the seller. It's not to confirm the contract price. It is to confirm whether or not they want to take a risk and loan on it. So because I had all of these sales outside of the neighborhood that looked exactly like this home, they weren't happy with me. So what they did is they used AI to check my report. And it was ridiculous. There were homes in the report where one of the comps and comparable sales in the report, AI said that the home was like new and remodeled. And they got that information because they were looking at the photographs of the home. And there were very few photos. And one of the photos was of a kitchen that had Corian countertops installed 25 years ago. But in fact, because in part of my research, I had talked to the buyer's agent of this, the home had a heritage oak tree, big oak tree, that had to be removed because it was cracking the foundation. The home needed a brand new roof that was going to cost over $20,000. And then the buyers estimated they were going to spend another $500,000 fixing the inside. Yeah. So the computer AI said this home was great.
Perfect.
And I'm like, no. So I get a reply back And it took me about 4 hours to reply to what the bank's questions were. And one of the questions was, is this the correct address? Because our information indicates this home is remodeled and like new, and you're saying it needs repaired. And I'm like, are you real? So in this case, took 5 days to get the report in. I mean, I wrote a dissertation. Then once the bank got it, they were concerned and they didn't feel really comfortable. So they wanted more information. I gave them the information and they're like, okay, we feel better now. But you know what? Let's do a little bit more just to make sure we're comfortable with the rest. So what do you think?
Second appraisal?
Second appraisal, or are they going to ask for desk review or anything like that? So they didn't ask for a second appraisal, but they did ask for a desk review. Oh, there's another 2 days. And still it comes up as, kind of a red flag. It's lenders are concerned about lending at the top of the market right now, and they're worried about risk. But that's kind of, that's how my week went last week.
Yeah. That's the thing too, is I totally get it. And I totally can relate, because as a mortgage lender, we kind of get some of the same pushback, like hurry, what's taking so long? And I remind people, like, if you had $400,000 or $500,000 to lend, would you just willy-nilly just look at a few docs and be like, oh, I hope they pay me back?
And I always say you do not want to rush the appraisal process. I say never do a short contingency on appraisal or loan. Either you do the contingency and give everybody their time to do a good job, or you waive all of it. So, that's my tip to everybody, because sometimes that fast appraisal is not going to generate what you want. This property was in contract with a 10-day appraisal contingency. Yeah. The first appraiser was sent out, and they sent somebody out who lived like an hour from the home. And the value came in like $500,000 short. So then they all rewrote the contract and were like, okay, let's try again. So it's very important when you're getting a loan for a purchase that you use somebody local who is using local appraisers as well, because you do not want to end up with somebody coming, from a completely different area of California to value your purchase.
Agree 100%. Yeah, I'd always tell people too, with agents, it's the same thing. My agent, lives in Stockton, but they're going to help represent me in Roseville. Don't know if that's the best idea. How big of a radius do you serve as far as appraisals go? Ones you personally do?
Currently, I am going as far south as Galt, California, over to Davis to the west, and then as far north as like Lincoln, and then up over the hill into El Dorado Hills. So that's a pretty good territory.
Awesome. Yeah. I don't know if I've ever asked anybody this question, but as an active appraiser, you've probably got some good data for me. What does an average appraiser do monthly? Do you do 10 reports, 15 reports?
I would say that I have colleagues right now who are happy if they do 10.
Okay.
There are big peaks and valleys right now going on in the ordering of appraisals. I did some stats, and it looks like about 80% of home loans in the Sacramento region right now are needing valuations. Yeah. So.
Okay.
But I mean, I know some of my colleagues, maybe doing 5 a month.
Okay. Yeah. And I think that it's been an interesting ride in real estate, and everybody related to real estate, for title companies, for realtors, for loan officers. I remember specifically a couple of friends of mine that did real estate, and they also worked in appraisals. And when there was, tons of appraisals being needed and not too many appraisers, like some people were paying $3,000, $3,500 for, a 3,500 square foot in San Mateo.
No, absolutely.
Right.
It depends. The fee that you are paid, or the fee you are charged to do an appraisal for your loan, is typically not what the appraiser gets.
Right.
I mean, there are so many people skimming off the top. There's a thing called an appraisal management company. They'll charge you $600 or $700 to get an appraisal as part of your loan process. And then they will go out and they will submit a bid to everybody in their panel, and they will pick the person who wants to do it for the cheapest and fastest.
Wow. Wow.
And then, so let's just say somebody says, okay, I'll do it for $425. The AMC is pocketing all of that money.
Yeah, so they charge $700. The appraiser
Yeah. So it's a big racket.
Yeah.
So before appraisal management companies came out, over 10 years ago, appraisers were getting pretty much the full amount.
Right.
And most consumers are pretty horrified to find out most of the money is going to administration and not the person who's showing up at the house.
Yes. And I think that I probably get that from buyers who are like, oh man, it used to be $400 or $450. Now I'm paying $700 for just a standard appraisal on a 2,000 square foot house. You don't have to answer this question if you don't want to, but I'm curious because I've worked with multiple AMCs. What are the, you can answer this probably without throwing anybody under the bus. Who are your favorite AMCs? None?
That's easy.
You don't like any of them?
I only work for lending institutions that have their own appraisal desk.
Okay.
And I get 95% of the money.
Okay.
And I will not accept a fee, under $560 for an appraisal.
Yeah. Have you ever signed up with Appraisal Direct, UWM's deal? Not a fan of that either?
Sometimes silence is a good answer.
Yeah, and you can plead the fifth.
It a good deal. For who?
Well, I'm just a mortgage guy. I'm just focused on doing mortgages. So I don't know.
I'm just being honest. I don't have to work for banks, so I only choose to work for ones that pay a decent fee, deposit money into my bank account in a reasonable fashion. Don't hold on to my money for 45 days. I expect you've gotten paid. I expect to get paid, and then have a really good process from reconsideration of value to management fees. And so, I stay busy primarily doing appraisals for the individual and not the lender.
Right. Yeah. But what comes to mind, what I think about immediately is the current system with AMCs. Who's going to do it the cheapest, the fastest? That's not how to get the best report. That's not how to get the best.
That's why I just laughed when you said, who's a good one? I'm like, I don't, that's a good question. Right. Who is a good one?
Right.
I could tell you if I went on an appraisal blog right now and somebody said, every day appraisers are posting, so-and-so wants me to be on their appraisal management panel. What do you guys think? Nobody gets a good comment on any of the appraisal forum groups. And when somebody says, is this a good company? Everybody's like, no.
Right. Yeah. So I what's the answer then? Because I think from what I know about it, getting licensed to be an appraiser, it's a lot of work. Not enough people are coming into it. So I don't know if it's still the case, but maybe with volume down, there's not as big of a shortage. What can be done to make sure?
So we used to have 10,000 appraisers in California. We are down below 9,000. And a lot of them are aging out. But also, if you look at how much an appraiser makes, their fees are incredible. Just the licensing in the state of California alone. We pay more than attorneys to be licensed by the state of California.
Crazy.
We pay more than real estate agents, mortgage brokers, and all of that. Our fees that we pay every 2 years are the highest to be licensed in the state. And there's less of us, so I'm afraid they're going to raise the rates even more. But, cost of business, cost of insurance. What do? We drive around, cost of cars.
Yeah.
Oh my God, heaven forbid if the state passes that law where they want to tax you on your miles versus your gas. It's
$1,400 for an appraisal.
Yeah, it's going to be crazy.
Gas is $6.50 a gallon, and
whatever. So it's all a magnitude. But there are plenty of people I know as the association president that would love to do more lending work. And there aren't a lot of homes for sale. There's not a lot of purchase loans going through. The other day I was looking, and I'm like, yeah, inventory's up, but it's still at a historic low.
Right.
And we have all these millennials who want to buy a home now, and they've got double incomes. They're coming in with money. They've even inherited money, and there's just not a lot to buy. So
yeah. I know that better than most,
know.
as a mortgage broker, where it's like, oh yeah, we really want to buy. And that's been interesting for me is the timeline between interested and pre-approved to actually closing on something has gotten
yeah.
so much longer. Buyers are a little bit more picky because they're spending more.
Oh my God, they're so picky.
Right.
I have seen so many deals fall out just because, I put in a report that the shower nozzle needed repaired. It was an
$35 at Home Depot.
It was an appraisal where literally the home had been a flip. So investor had bought it, renovated it. And as part of my scope of work from the lender for this FHA appraisal, I actually have to turn on faucets and turn on showers and flush toilets. And I flushed the toilet and the knob fell to the ground. And I was like, okay, that's no big deal. That's no. And then I turned on the shower and the shower head went flying across. And I'm like, oh my God, they didn't even screw the shower head on. And then after that, I'm looking under the sinks, wondering if there's even plumbing, that kind of thing. And somebody pulled out of that deal because from that feedback, the agent's like, why did you call out a shower nozzle? And I'm like, well, this is what happened.
Right.
And, the buyer's like, I'm going to look into this. They discover none of the work was done with permits, new heater, new air, no permits. New water heater, no permits, and then they backed out of it. But it started with a stupid shower nozzle.
Right. Which is, it's good that you're pointing that stuff out. I think that buyers in general are just, they're a little bit on edge.
But don't you think they should be picky?
Oh, 100%. Yeah. And I tell people too, if sellers knew, people who aren't in the market don't understand, first time home buyer, 5% down, even a median home in the 500s. We're approaching, $4,000, $4,500 a month.
So would that seller buy that house?
Exactly.
For
Yeah.
that payment?
And if you're paying $4,500 a month and you're bringing $75,000 cash to close, would you want the shower nozzle to work? I would for sure. But in that case, yeah, maybe they go and
or I see this all the time. The home's selling at the top of the market. It's been remodeled, and it has windows from the 50s, the single pane aluminum slide that make a scratch now. And they're like, oh, this is so beautiful. And it's
vintage.
And then I wonder, a lot of homes over the years, the insulation just kind of goes like this. And then eventually after 50 years, it turns into sawdust. So on homes like that, I'm like, oh, I bet there's no even insulation in this home.
Right. Yeah. It only costs $900 a month to keep it cool in the summertime.
No, I know. I guess that would make a good renovation loan or energy efficiency loan in the future, that type of thing.
Yeah, for sure. It's just, what it reminds me of as we're talking about it is just it's such a tough market because, on one hand, there's very little inventory and not a lot for sale. So it's competitive for buyers. So you got to compete against other people trying to buy, but then, you don't want to be in a hurry or just buy anything because you're paying a premium from an interest rate perspective and whatnot.
No, I know. So I just finished an appraisal and, it's a 2,200 square foot home and there are no 2,200 square foot homes that have sold all year.
Wow.
We're halfway through the year in this whole neighborhood.
Wow.
But then you look and all the pendings are homes over 2,000 square feet. So, there's a pent up demand.
Right.
So it's just amazing to see some of our areas.
Yeah.
And what's going on.
Yeah. Hopefully it's coming. Hopefully there's some inventory coming. Like I kind of take a look at the stats. I don't really dig too much into them, but you see that pendings are up, or not pendings, but I guess pendings are up, but inventory's up. But you're up from such a small amount. We're still
it's not
way
it's
low.
Not for every buyer there's 5 new homes to pick from. It isn't really. And that's why, somebody enters into a loan and they have certain terms and they're like, okay, I'm looking. I know I'm at 6.99. Yeah. And then you find your home 2 months later and it's like, oh no, it's now 7.25. And then interest rates are a moving target right now.
Oh, for sure. Yeah. And that's where, if people are already kind of at that threshold of, I don't want to pay more than $4,200 a month, a 0.25% might increase the payment by a couple $100 a month. So
I am still seeing sellers who are accepting under contract, to help buyers with closing costs and loan buy downs.
Right. That's something in my business that for sure, as more inventory comes, I actually want rates to stay higher for a little bit longer because more inventory will come. It won't get snatched up right away. And sellers will be in this position where, if you want to sell your home below the, average time frame to sell it, you're going to have to, throw the buyer a bone. And usually that bone is a little bit of help with the closing costs and or some rate buy down.
Or hey, we know the carpet's shot. We'll give you, $5,000 towards new carpet.
Right. Yeah. I've got one right now in contract where we've got 21,000 in negotiated credit because we had some issues here. They had 10,000 at contract. They negotiated another 11,000. And so it's all the closing costs are going to be paid. There's going to be a 1.0 buy down where the person's going to get a 5.7 in year 1, then 6.7 years 2 through 30. And, ultimately the seller got what kind of, was fair for them. The buyer ended up structuring a deal, not having to bring a lot to close, having a comfortable monthly payment. And so everybody won. It's just a matter of professionals negotiating it. So one last question I had written down, and then I'll let you get the heck out of here because I think that the minutia of appraisals is intriguing. And I've been in mortgage for 10 years. I don't think that I really learned about the different classes of condition until I had this is how most people learn most things. Is you have a problem with something and then you're forced to learn it.
I know.
So tell us when somebody talks about C1, C2, C3 on an appraisal, there's actually something that you do as an appraiser that says this house is in phenomenal condition or this house is falling apart and should probably be torn down.
No, absolutely. So, we are supposed to be trying to write unbiased, neutral reports. And if you think about it, there are words that are ambiguous that are used in industry standards all of the time. And there are words that we have used historically to describe the condition of a home that are just downright offensive. The home is in poor condition. That could describe somebody's, financial status. We don't want somebody associating that when we're writing a report. And so years ago, Fannie Mae came out with a condition rating system so that we aren't using words like average, good, poor, fixer, above average. All of those are very ambiguous and we each have our own opinion. I get called to do appraisals all the time and the owner's like, my home's in good shape. I remodeled it. And then I show up and I'm like, yeah, it's remodeled. It was remodeled in the 80s. And I'm like, yes, it's remodeled. I agree with you. But what we're talking about is, nothing has really been updated or remodeled in the last 10 to 15 years. And they're like, oh yeah, we haven't done anything since then. So we're looking at now, this standard appraisal will have, instead of words describing a condition of a home, they'll have codes. And it's really simple. It's 1 through 6. 1 is a brand new home. Nobody's ever lived in it. 6 is a home you can't live in. Half of the roof's off or, windows are destroyed or walls are destroyed. And then there's everything in between. So when you see these ratings in a report, just understand it's a way to try and neutralize the field, not use offensive language, and be really objective. So a 1 is a brand new home. A C2 is like new. So it literally could be a home, that somebody bought in East Sacramento. It's built in the 40s, and they tore it down to the studs and rebuilt it like new. A C3 is a home where some, but not all, of the major components are remodeled. So that's most of the homes in our region that have had some remodeling or updating done in recent years. A C4, nothing wrong with the home that's C4 condition, but usually it means not everything's been updated. Or it could be a home that's 20 years old and there's nothing wrong.
Just got some deferred maintenance made. Yeah.
But the C5 and C6 usually result in problems in the loan process. Right. So for your audience, if I say something's a 5, that means there's something substantial that needs repaired. So that might mean the roof is shot and needs replaced, or, the home's got $16,000 in dry rot. Now, a bank doesn't want a loan on homes like that.
Right.
So on your end, what happens, you're like, oh, it's a 5 or a 6, the lender will require me to write the report subject to repairs. And then what does that mean for the loan process for you? If I write a report subject to repair.
Right. Then we say, go ahead and do those repairs, Mr. Seller, and let us know when they're done. We'll have the appraiser come back out and sign off that those repairs are done. When those repairs are done, and I don't, I'm out there moving and shaking hands and kissing babies. I'm not deep in the weeds. Does it actually change the condition? Can you go from a 5 to a 4?
Yeah. What they have us do is, if it's a 5 or a 6, they say, write the report subject to it becoming a 4.
Okay. Yeah.
So
Because I think
usually-
that's most lenders' overlays is like they're just not going to lend on the 5 and 6. So it's got to be a 4. So you're like, fix the roof.
But I mean, if you're reading one of these reports, you're like, what are all of these codes? I get called in all the time to teach classes to agents just about what are all the acronyms and codes used in an appraisal report. But the most important one for a homeowner is this condition rating system.
Right. Let me ask you this. Is the condition something that's used to kind of justify a value, or could you take a C4 as a comp and say, I'm going to add 15,000 of that because this home's a C3?
What you're trying to do is you're trying to find like homes in the system. And when the report gets to the lender, it gets uploaded into a portal that scrubs it to see if it thinks you picked the right comps based on its condition ratings that are created by AI that looks at photos. And yes, we've gone over that. So, typically you try and pick homes of similar condition.
Okay.
And I mean, nobody's remodels to the same degree. So there's a little ambiguity there.
Right.
But I mean, if a home hasn't been remodeled in 20 years and somebody's calling it a C4, you expect to see homes of similar condition in the report. But, if you're a listing agent, you may not have used the same comps.
Right.
You're like, oh, we're using price per square foot. Everything that's sold has been remodeled. So our price per square foot is skewed because everything's remodeled and the house we're selling isn't.
Right.
So there could be some variance there.
Awesome. Speaking of listing agents and anybody listening, right? As an appraiser, do you have a message to the world? Because I think sometimes, a lot of darts get thrown at appraisers. I mean, a lot of darts get thrown at loan officers and title folks and everybody. But what might be a message to people, a misunderstanding about appraisals and how they're done, or appraisers in general? I know, because I've seen, how hard appraisers work to come up with these values. What's maybe your parting message to the audience?
A typical appraiser is just like any other profession. There's good and there's bad. Majority of them are working within the guidelines of what they're required to do. The overlays are from Fannie Mae, Freddie, FHA, VA, the lender, the AMC. They've all got these overlays of rules we have to play within. And it's within those rules that we come up with our value.
Right.
And we're restricted by those.
Right. Yeah.
So
not out there willy-nilly.
no.
Yeah.
And the most important thing is, biggest myth of all, contract price is not the same as market value.
Right. Yeah. I tell people all the time.
Contract price is what you've agreed on in your transaction, but market value is what the market indicates a reasonable buyer and seller will come into to purchase a home, paying, with cash or financing, not acting under duress or undue stimulus. And so sometimes that's the big disconnect.
Right. Yeah. And that's my parting message is contract price, list price. These numbers don't mean anything, right? Somebody can list a home.
It's not appraised value. It's market value.
Right.
That is what we are being asked.
Yeah.
What is the market value defined by these larger entities?
Right. Yeah. So I get this all the time from buyers. Like, it's listed at 600. You think I can get it for 590? If somebody listed it for 600, and you buy it for 590, you think you're getting a deal. If they list that same exact house for 549 and you pay 590, you think you've overpaid. But it could be the same exact house. One choose list at 549 and have a bidding war. Others choose to list a little bit high, and have people feel like they got a deal by paying 10,000 less. Whole nother video.
No, absolutely. And I mean, I always tell people, If you need a second opinion on an appraisal, just shoot me a message on my website, appraiseittoday.com. Be more than happy to just do a review.
Awesome. That was going to be my final thing is thanks for joining me. I appreciate it. I learned something new today. Thanks, Amy.
Awesome.
But Amy Parker, appraiseittoday.com.
Yeah,
That's the best way to get a hold of you.
absolutely.
All right, cool. Thanks again for coming.
Alrighty.
All right.